Wall Street began the third quarter with an erratic session Tuesday. As a mix of news made it clear the country is still knee-deep in economic problems, some positive trends emerged, including better-than-expected sales for General Motors and strong exports for U.S. factories. The Dow Jones Industrial Average, down more than 150 points earlier in the day, rose 32 points to 11,382. The Standard&Poor's 500 index rose 4.91, or 0.38%, to 1,285. The Nasdaq composite gained 12 to 2,305. Oil rose 97 cents to settle at a new record of $140.97 a barrel, as worries about tight supply and mounting tensions in the Middle East continued.
The fundamental picture has to do with strong global demand, tight and stagnant global supplies at best, a declining non-OPEC production exacerbating that supply problem, and that brings us to where we are we are in the midst of a demand shock as opposed to 1973 and 1979, which were supply shock price spikes. This one is far more extensive and has much longer legs.
Meanwhile, worries about personal investments had many expressing concern about the stability of the economy.
My 401k is okay right now. I pulled a lot of it out, put it into cash investments, as is advised by most of the 401k managers right now. So, because we're heading into a bear market.
Yeah, as I get closer to retirement, that's always a concern. The market, though, I think is up and down. It's in a down period right now, which represents some buying opportunities. So there's an opportunity, I think, to make it better long term.
Prices rose early in the session, then turned sharply lower for much of the day before recovering late in the session. The uneven performance wasn't surprising. Some bargain hunting was to be expected after a dismal first half, and in particular, a dismal June. Diane Kepley, The Associated Press.